Welcome to a capital hungry educational webinar, specifically a psychology topic webinar on normalizing losses in trading. We are going to be talking about more than just that, but that is something I really want to focus on for many various reasons. So, of course, you guys being guys and girls, being in capital hungry, you of course know we have a lot of webinars on different technical and fundamental topics, whether it be from key levels to various topics on market sentiment, whatever it may be. But through my journey and looking at the success of other successful traders, of course, in the market over a period of years, course of history, I have noticed that trading psychology is something that is more important than anything else. Okay. So that is why I have been creating more webinars on trading psychology, from such as human errors, long-term thinking, different psychological habits that hinder our growth. And another thing that I've been noticing that hinders a lot of financial success or really causes people to lose more is the fact that losses are not something that is normalized in trading. So for one, we have to understand that trading is a numbers game and a game of risk management and probabilities. Okay. As important it is to have very strong skill sets, have a strong knowledge base, have great analysis, which is helps put probabilities in your favor and increase your personal confidence. It is just as important to understand that this is more of a math and numbers based game, whether you're trying to compound success and wealth long term, your financial gains, whether you are looking at the risk and reward returns, whether you're looking at your personal risk management plan. That side is much, much more important than anything else. Understanding that this is a numbers game. It is not about really essentially being right or wrong. And we're going to dive into that more. Okay. So now, before we even talk about trading, understand in our modern society, in our day-to-day lives, from a very young age, when we are programmed, first put into the school system, we are told that taking losses or being wrong is a negative. That's what we have been told, whether you got a bad grade in school, whether you did something incorrectly at work and you got docked pay, whether you made a mistake in your personal life. We are told that all of these are very negative and incorrect. So what this has done for our society is psychologically created this fear of people being incorrect or wrong, or just having people not being able to deal with being incorrect or wrong. Because at the end of the day, in my opinion, there are two ways to approach that situation. So due to this preconditioned programming of taking losses or being wrong or losing in anything, whether it's a sport or whether it's getting a bad grade on a test or making a mistake at work, we are all told this is a negative. Okay. Yes, of course, it is human nature to want to be on top and be the best of our abilities, and humans are very competitive naturally as well. Okay. I'm not saying that I'm not saying that winning is also not useful as well. Of course the market is made up of winners and losers, right? But we have to understand that if we can first comprehend these concepts and normalize losses, it will it will make us long-term winners in the market against the 99% who are doing what is already psychologically programmed and what is comfortable and what is easy. Okay. What is comfortable and what is easy is feeling those negative emotions when you suffer a loss or when you are incorrect. Okay. So in life, outside of trading, this fear of being wrong, of being judged, of losing, creates a lack of execution, decreased ambition, and decreased confidence in one's skill set. Now, remember, besides just normalizing trading, everybody from a very young age is already given is already given an image through schooling, through their work, through their employer, through their parents, through their family, of what that person's value and what that person's limit and potentials are. Okay. The 99% are told that if you don't get good grades, if you don't get a good job, if you don't do X, Y, and Z, that is predetermined success, quote unquote, success by society. You are not successful. You are not accomplished. You are not worth getting paid more. This is your limit. You're not good at studying science because you got a C in it. You can't get paid more because you didn't get this extra licensing. Whatever it is, you are constantly being told your limits. You are constantly being told your worth. You are constantly being told your path in life by external sources due to this preconditioned system, right? On top of having a fear of the unknown, having a fear of being wrong, having a fear of losing. So you already have these natural limits put on you. They're not natural, sorry. You already have these unnatural limits and expectations put on you based on the system, based on society from a young age. And you already have this fear of being wrong or losing based on that same systematic programming, right? Now, based on the systematic programming, when a person usually suffers a loss or being incorrect, this is directly correlated to negative emotions, and that is what comes out, right? Most people will either get angry, they will get sad, they will become very closed off, they might become very aggressive, but they don't use this opportunity as an area of, they don't use this as a learning opportunity or a potential opportunity to improve themselves as a weakness has been highlighted or a period of being incorrect has been highlighted and exposed. They instead turn to the side which is most easy of following the negative emotions of being wrong, of being angry, of being resentful, of being just heavily dictated by personal emotions, doubt, fear, whatever it may be. Okay? This natural psychological response to being incorrect and losing from our day-to-day lives is absolutely not effective for trading and will actually lead to more financial losses. Okay? Because at the end of the day, we know that trading is a numbers game. It's about putting a certain predetermined risk into the markets on a trade that you have done analysis on, and in your mind put probabilities in your favor for whatever XYZ reason, following a plan to get a potential payout that should be double, triple, quadruple, 5 times more than your risk. You really shouldn't be in the markets looking for one-to-one trades in the sense that you're risking $200 to make $200, because in my eyes, unless you have some type of confirmed 90% win rate, that is more of a gamble, right? That will not lead to long-term success, but because you're constantly going up and down, you're going one step up, 2 steps back, and it really depends on your psychology and the win rate percentage of your trading system. But we also understand that most trading systems, even manual institutional traders, do not have an 80%, 90% win rate. They do have great risk management and risk versus reward principles, where whatever they are risking in the market, they may be making 3 times, 4 times, 5 times, 10 times more than that over an extended period of time. Okay. So with that being said, we know that in trading, it is all a numbers game, a risk management game, and a game of patience and discipline. Patience pays and impulse loses. But because of these predetermined psychological factors that we have been programmed with since a young age, we cannot accept trading losses of just that. We see it as something a lot bigger. We see it as us being like when a person, for example, when a trader takes a loss, they don't just take it as, okay, the risk I put into them, like thinking logically, you just go, okay, this was a planned trade. I put this risk into the markets. I already predetermined that this was the stop loss level or area where if I lose this much percentage or dollar amount, I'm going to be out of the markets. This is all already predetermined. And I'm looking to get this much of a take profit. I'm looking to double, triple, have a 1-4, 1-5 risk versus reward. When you're thinking logically and you take a loss, you step back and say, okay, this trade was incorrect. I have lost this monetary amount, but let me get ready for the next trading. Let me get ready for the next trade. Let me get ready for the next potential setup. First, I'm going to step away so I don't have any emotional attachment to this loss, which is very hard to do for people due to that predetermined programming over years, right? Our whole lives. But first, the person logically will assess the loss. They'll say it was predetermined. They'll say it was incorrect. They will step away to lose any emotional attachment and keep in mind the risk management and the long-term vision that they only need a 50%, 40%, 60% win rate of their overall quantity of trades to really compound or grow their finance, grow their capital, grow their overall trading account, right? So that means when that person comes back again logically, and if they stick to a 1-3 risk versus reward, 1-4 risk versus reward, then their next trading win is going to make back that loss and more, right? You're going to be ahead, even though you took a loss and one win, right? This is a tie, and mentally you took one loss and one win. So you are a loser one time and you are a winner one time. But thanks to risk management, even though you took one loss and one win, total of 2 trades, you're still up money if you're sticking to your risk management plan, if you're sticking to your risk versus reward, because that one win should be triple, quadruple, 5 times, 10 times larger than that loss, that business expense loss. Correct? It's just numbers. It's just math. But because of how we have been conditioned in our day-to-day lives of not being able to process a loss or being wrong, being given a bad grade when you did poorly on a test and told you're dumb at something, your parents putting limits on you, your family members, your employer, your boss, everywhere you go to, they tell you your value, they tell you your skill set, they tell you your grade. And a lot of people have this natural fear to even execute because they've already been told their limits and their potential for so many years that they're just scared. Because all of that is normal in our society, nobody can accept that minor trade. Like a very few people when they're coming into trading can accept that trading loss. So instead, when they take that trading loss, what happens? What natural emotions come into play? The anger, the aggression, the feeling of failure, the feeling of being dumb, the feeling of feeling useless, of having no value. Because that is the bitch, mind my language, that is the markets, okay? What I'm saying by that is the market can make you feel like a god. When you're right and you're winning and you're on a roll, you're going to feel like a hero. You're going to feel like the best investor. You're going to feel like Warren Buffett. But when you're losing, you're going to feel like a bum. You're going to feel like a below class. You're going to feel like, why am I wasting my time with this, et cetera, et cetera. That is a drastic spectrum of emotions to feel, all while going through the process of trading. And some days you can feel those emotions within a 1-day period. In the morning, you could be doing great at London session, and then you chose not to stop trading and you overtraded. And by the end of the day, you lost everything through New York because you didn't have the discipline to stick to your plan. You got infatuated and seduced, I like to call it, by the markets and trying to make more money because you were on that financial hot streak of whatever. Financial hot streak doesn't have to be millions or thousands of dollars. Whatever gives you a rush, you have to understand and assess that with yourself. Okay. So you are on this hot streak for yourself of trading. You felt great. You were on this emotional high. And then this leads to illogical decision-making and poor decision-making, and you lose it all. You're literally feeling the one end of the spectrum of emotions to the other end of spectrum of emotions, all within possibly a day period, a week period. That is a lot to take for your mentality. That is a lot to process. Remember, humans are very emotional creatures. We have feelings. We are not trading robots. Okay? So going back to what I was discussing, what happens naturally, what goes off in your brain when you take that loss? You get angry, you get aggressive, you have these very, very strong negative emotions that are very hard to control for the average person and fogs out logical thinking. So now you're not thinking logically anymore. You're thinking, why did this happen to me? This is bullshit. GJ is going up when it should be going down, et cetera, et cetera. You're making excuses. You're blaming the service you're in. You're blaming me. You're blaming your parents for distracting you. You're blaming everything except for yourself due to these emotional triggers going off in your brain that a lot of us do not have control over because we've never spent the time to develop and program our brains how we want. We've only been programmed. We've only been told how to think. We've only been told that you should feel these quick rushes of dopamine happiness when you're eating a cheeseburger or when you're gambling or when you're smoking a cigarette or when you're watching this movie or when you're watching another athlete or you're watching the sport. That's happiness. And if you feel anything sad or you feel depressed, you're not supposed to feel those feelings. Go take this pill. Go eat more junk food. Go do this or that. Just as much as humans are meant to feel happiness, we're meant to feel sadness. These feelings and emotions exist for a reason. Being self-aware about these feelings and emotions is the key. Then you can take control of them. Then you can use them how you want. Okay? And we are going to get into details of the trading, of course, and all that. But you have to understand these psychological concepts from a broad perspective because it gives you something to relate to. It's not just in trading, it's in everything. This is the system we have been born into that conditions us to these ways of thinking, which these natural ways of thinking are extremely, extremely dangerous and will just lead to more losses in financial trading, in trading the markets. Okay? So now, because losses are not normalized in trading, right? Because nobody can handle being incorrect and you have this impulsive spew of negative emotions come to play that lead to illogical decision making. What does this cause? This causes you to forget about your trading plan. This causes you to forget that trading is a numbers game and a risk management game. This causes you to forget any signs of patience or understanding that this is a game that takes years to develop financial wealth and develop your knowledge and develop your skill set. Just like anything else, you forget all of that. And trading is so sensitive where let's just say you're an athlete or you're working out in the gym. You can work out for a year and then stop working out for a month, or let's just say you get or you make a mistake or something like that in your exercise regimen during your training, and you can't work out for a month. You are still going to retain a good amount of muscle memory, a good amount of mass or muscle that you have developed over that year. It's not going to be the same as when you're actively working out, but you're going to retain a lot of it. In a lot of industries, you're going to retain a lot of the gains you get or a lot of the output you get for the input you put in. In trading, you don't. Trading is so sensitive that you could have gains for a year, you could have gains for 6 months. And if you lose emotional control, you start over leveraging, you start over trading, you can lose all those financial gains just as fast or slow as you made them, right? Trading is extremely sensitive. So now understanding that these financial markets are extremely sensitive. If you have watched the other psychology webinars and understand that this is all a mental game and that a lot of human emotions and errors are going to cause more losses in trading. If you understand that not being able to accept a loss in trading is going to lead to more financial losses, if we understand all this, we should slap ourselves on the head. That was me slapping myself on the head, and wake up and focus on what is right and reprogram ourselves. Okay? One way we have to do that is we have to shift our mindsets and normalize being incorrect or losing in trading, because it's not about being right or wrong or being happy or being sad. It's not about any of that. Even when we are winning trades, we have to normalize that this is just a winning trade, and not get that rush of dopamine, right? Because that rush of dopamine, that feeling of a high, feeling like a god, is going to lead to illogical decision making. Anything that leads to illogical decision making in trading, we have to X out. If it's social media impacts, if it's following these signals, if it's seeing someone else post fake demo profits, if it's something in your real life, such as anything that's impacting your emotional psyche, you have to either learn to work around it or exit out if you can remove it, because it's only going to have a negative impact on your financial growth in trading. Okay. So another thing is, people cannot accept losses, even though losing in trading is unavoidable and it's a part of the game. Okay? And there's not been one trader in history or investor in history who has not made a mistake or lost money through their process, through their journey. Some have lost millions, billions of dollars in the market and then have come back even stronger. Okay? But yet, from a retail trading perspective, everybody is trying to strive for these 90% win rates, these 100% win rates, these 80% win rates, creating a lot of false expectations, going against what they already know about how trading works, and then just putting this immense pressure on yourself that nobody can really attain, right? Nobody, like, it doesn't make sense to go for a 90 or 100% win rate when the money comes from the risk management, the money comes from the longevity in the markets of following a risk management plan. It doesn't make sense, right? But because of social media influences, because of our natural systematic programming, because what is fast, easy, and convenient sells, our mind still naturally will go towards that because it's easy to comprehend. It feels natural. It's comfortable. It's what we've seen in the media, seen growing up, seen with our parents, seen with our friends, seen with around the world since we were kids. It's the system, right? And if anybody goes against that, if anybody wants to do more, they're seen as weird. They're seen as the weird ones. Come on. We got to wake the fuck up. Okay? This is why this is a very, very important psychology webinar alongside the other ones, especially the human error webinar, because if we can retrain our brains to normalize losses in trading, of course we want to strive to win trades. Of course we want very accurate analysis. Of course we want to win more than we lose. But the fact that the majority of us cannot accept losses due to these psychological preset reasons is one of the reasons we are hindering our growth, or we are taking more financial losses. It is probably one of the biggest reasons behind it. So if we can normalize losses in trading specifically, what does this do for us? This takes away our attention and focus for always wanting to be right, for always wanting the best analysis, the best X, the best Y, the best Z, whatever it may be, and puts our attention and focus on what is actually going to make us money: the risk management, the discipline, the mental growth, the math. It's just fucking digits. There's an unlimited amount of money in the world. They can print out as much as they want. It's just fucking digits on a screen. We have to remove our emotional attachment. You, me, all of us. I'm not like a robot. I'm human. You know what I mean? We have to remove our emotional attachment to these fucking digits, because there's an infinite amount of it, and we just have to know how to get our share of it. We can be financially free with crumbs of what's available in the market, with fucking crumbs. Pardon my language. Let me cool down a second. Okay? So when we begin to normalize trading, we start to focus and drive our attention towards the risk management and the numbers behind this game. We create realistic market expectations that we probably aren't going to take $100 to 100,000 or $100 to 1,000,000 in a month or 2 months or a year. That it's going to take a period of time. It depends on your initial capital. It depends on how much you're going to risk per trade. It depends on your risk versus reward. It doesn't depend on your win rate. Obviously, you don't want to have a below 40% win rate. That just means you don't have the knowledge and skill set developed to create analysis that puts probabilities in your favor. That means you have to focus more on that as well. Just like you have to sharpen all your tools, right? But we have to put attention on sharpening the psychology tools that nobody else is doing. Okay? So some quick points just to quickly review. Our modern society does not accept losses or being wrong. Psychologically, people suffer with dealing of losing or being incorrect, especially with money, because the dollar controls our life. Everything we do is based around the dollar. Making money, spending money, paying taxes is corrupt, right? This leads to a fear or lack of execution, decreased ambition, decreased confidence. This is something that's programmed from a very young age. This is 100% not an effective mindset for trading and will lead to more financial losses. And we need to normalize being wrong or losing in trading, because it's not about being right or wrong. It's about risk management. It's about the math behind the growth. If you want to dive more into that, read yourself about financial compounding. Watch the compounding webinar. Read yourself about human psychological errors, human errors, etc., how they get exploited in life. Go read about it. Go confirm the facts. Go against the grain. Go against the system. If you really want more in life, if you really want to develop your character, your mentality, your physical body, spiritually, you have to go against the system to really develop those things. Otherwise, you're just going to be a zombie. Okay? Normalizing losses creates realistic market expectations. Losses in trading are unavoidable and a part of the game. Just like a business does not only generate revenue and only bring in income, they have business expenses. They take business losses that are part of the business plan from the get-go, and sometimes outside of the plan that they have to adapt to. Nobody is only just earning money without having any losses or expenses. They go hand in hand. Just like the market itself at the core concept is made up of winners and losers, profits and losses, money from one hand to the other. Money is just always moving from hand to hand. We just need to keep money in our hands more often so we can live how we want. Okay? Controlled losses. What is a controlled loss? A controlled loss is something that was already predetermined as per your trading plan or risk management plan. Okay? 1 second here. It is something that is predetermined, pre-planned, and controlled, just like a business expense. Okay? This is a learning tool, and when you track these controlled losses and when you track your wins, you can physically see. And if you track your wins and losses and journal your trades, of course, this is known by everybody, but the whole psychology behind it is that over an extended period of time, you can physically see that your winners are larger than your losers, and you can learn from your losing trades. You can go back check them. You could say, was this an impulsive trade? Was this based on emotions? Was this following my plan? You can create a checklist for yourself of a discipline checklist. Am I following my trading plan? Was there analysis behind this? Was this predetermined? Was there any emotions behind this? What was my main reasoning for entering, et cetera, et cetera? That's why wins and losses should be journaled. That's why I've been focusing so much on this, on always sending these reminders. Right? Just as important it is to do the analysis, to understand the events we have, to actually execute on the trades. It's just as important to follow a risk management plan, just as important to follow a compound plan and follow these mental reminders. It's just as important. But because these things are more difficult to do, they're not as appealing as taking trades. They're not as appealing as looking at the charts or doing analysis. They may not be as quote unquote fun. They're not marketed. They're not sold. People avoid this. People avoid this because they see it as a chore. Well, no matter what industry you go into, whether it's a sport, whether it's a business, whether you want to be a chef, not everything you do, every single task related to the success in that industry is going to be fun, is going to be enjoyable, right? Just like we have to feel happiness, we have to feel stress. We have to feel anxieties and know how to use this, know how to absorb it, how to translate it, how to use it in our favor. We have to know how to do these things, just like you know how to be happy when you watch TV and sit there and go numb for hours or go watch YouTube videos for hours doing nothing. We are pre-programmed to be completely content with all that, but any form of stress, any form of challenge, any form of negativity, we just crumble. And that's meant to be that way, so we never chase after more. We never wake up as a collective. But us in here, we can wake up and take these psychological concepts and apply them to trading, okay? So that's why I say pre-plan the trade, execute as per your plan, journal the result. Once I show you guys some of my compounding progress over the next 3 months, even if Capital Hungry, I'm going to show it after 90 days, even if Capital Hungry has less members, you're going to see that every trade, especially from starting from September, is going to be pre-planned, journaled, win or loss. Everything is going to follow that systematic approach as I'm coming back into focus and I'm ready to go again after like just coming back and scalping and making some money to pay all my bills and stuff, right? Now I'm ready to go. And I want everybody else just to be just as ready. I just wanted to take that period of time for myself just to really focus on the psychology and try to reprogram myself from my physical health to my diet, to what I eat, to how much I sleep. Like I've been trying to get more rest. I've been trying to be more disciplined with my body, with what I eat, with what I watch, with what I'm putting into my mind. Because this is all going to translate into your trading, right? So traders focus on having ridiculous, unattainable win rate percents and because that is something you can advertise and easily sold. It's easy to say, man, we win 90% of our signals, 90% of our trades are winners, because the dumbass average person is going to want to buy into the whatever service that person is selling, right? That is not the consistent way to long-term growth. When you can remove when you can remove the fear of being wrong and losing in trading, this will increase your confidence to execute better and share analysis, as well as continue to grow your knowledge and put the effort to refine your skills, because you are understanding that this is a game of numbers. This is a game of risk management and personal discipline. So what are you going to do to put those numbers in your favor? You're going to learn more. You're going to study more and backtest more, so you can continuously do analysis that will increase probabilities in your favor. You're going to read more books on mental growth. You're going to want to have a better diet, live physically better, increase your discipline in and out of trading, because you know if your true goals are to gain financial success and financial freedom for trading, you know these are core pillars, the risk management and the psychology to financial success. You can't have it. You cannot be rich without those things in trading. Nobody can. Okay? It allows you to stick to the math and risk management side of trading, and it allows further separation from emotions that hinder our financial growth. Something else we want to understand of why I wanted to trade to an intraday trading style or a swing trading style, or play more of these larger pip ranges. For example, like I'm going for a 1 to 4 risk versus reward, 10 to 20% risk starting with a lower capital, and my wins should essentially be 4 times the size of my losses. Just from a core concept, or just from a core principle, it's going to be about 20 pip stop loss to an 80 pip take profit. This is more of, you can say, an intraday range. It might take a whole day or two period sometimes to fulfill a 80 to 100 pip range. It's not a 5, 10, 15 pip scalp. The mental side of why I wanted to shift to that is for various reasons, and it's directly based on the two pillars that I'm talking about. It's based on the risk management in probabilities, and it's based on the psychological factors between scalping and intraday trading. How scalping is very fast paced, both wins and losses. This will directly cause more impulsive short-term psyche impacts on you unless you have developed major discipline over the years, or unless you're using a scalping algorithm or a scalping robot that does not have any interference into its decision-making process. Humans have constant interferences in their decision-making process, and especially when you are scalping, it is very fast-paced. You have very minimal time to create logical thought processes, and you have to be in and out of the markets very fast, right? Or at short targets. These impulsive, fast-paced losses and wins create an impulsive shot of dopamine when you win. We know when you get that impulsive shot of dopamine when you win, it's going to interfere logical thinking and might cause you to overtrade, over leverage. The probabilities of over trading and over leveraging in scalping is higher. That's just numbers. Go Google it. Right? And when you take an impulsive loss, just like you have like an impulsive, I mean, very fast paced loss, because scalping, if you have a 10 pip stop loss, you can get that slapped in 1 minute. Right? Now you're getting those same negative emotions coming into play, but even faster. You have even less time to think. You're angry and aggressive or sad even faster. And now you're going to make even more illogical decisions at a faster rate. Right? The reason I switched to intraday style is because of, one, the risk versus reward. It's hard to have a 1 to 3, 1 to 4, 1 to 5 risk versus reward while scalping. Like, how can you have a 5 pip stop loss and like a 25? Like, it's hard to get trades with those types of risk versus rewards. That's why most scalpers scalp a 1 to 1 or a 1 to 2 risk versus reward ratio. They'll risk 10 pips to make 20 pips, risk 20 pips to make whatever. You get what I'm saying? In intraday trading, it requires more patience and time, but as you guys have seen the analysis play out for a year, the trades play out. You've seen Capital Hungry, basically myself, call out trades for thousands of pips, right? You have more time to think because your trade is potentially going to play out over hours or over a day period. You have time to think. You have time to observe the price action, make logical decisions, right? So it's the whole mentality side that intraday trading and swing trading requires more patience and is a slower process essentially than scalping, of course. And the probabilities and risk management side that intraday trading, I mean, playing these day-to-day ranges, these 80, 100 pip, 200 pip ranges, whatever it may be, right? You have more time to make decisions and a better risk versus reward there. It's just numbers. It's just, those are facts, right? Even with spread, how can you even have a 5 pip stop when most pairs spread is like 2 pips, 3 pips, 5 pips, right? So scalping is very sensitive in that fashion that there's so much that can interfere with your decision-making process and your emotions, okay? Now, just this week as an example, it is only Tuesday. We know that when we look at the compound plans, when you are compounding intraday, it is about quality over quantity. If you guys look at any of the compound plans or the wallpaper I send, here, let me just show you for a quick second. Right? This is, of course, very aggressive, and this is a 1 to 3. But in a perfect world, If you took 10 wins and had 0 losses, of course, losses are normal. That's what this whole webinar is about. I'm just giving a conceptual example. This is not in a perfect world, and the world is not perfect, right? In a perfect world, though, if you deposited $1,000 and risked 20% on every single trade, which is very aggressive and of high risk percent, but that is the whole purpose of having a smaller deposit amount. In 10 trades, you would take 1,000. In 10 perfect winning trades, you would take $1,000 to 100,000. Okay. We know that there's scalpers out there who take 10 trades a day, dozens of trades a week, hundreds of trades a month, and do not have this longevity or this success while compounding because of the smaller risk versus rewards and because of the emotional impacts involved. And it's especially difficult if you're trying to start from a lower capital, right? If you're trying to start scalping below 10K capital and you're trying to compound it, it's extremely difficult. You're going against all these factors that I'm saying, right? So, and that's of course in a perfect world. Now in Capital Hungry, for example, just this week, we called 100 pip buys on GJ, 70 pip buys on Euro USD, 70 pip sells on USD CAD, another set of 70 pip buys on GJ after the pullback just yesterday, right? Gold played sells if you played it through the key levels for 200 pips. This is all in 1 or 2 days. Are the markets always going to provide these opportunities in the same type of fashion? Probably not. But if you can catch one of these trades, 2 of these trades a week, and actually stick to the compound plan, stick to the risk management, understand that losses are normal. So if you take that 20 pip loss, it's fine. But if you take 2 trades a week, 3 trades a week, and you win 2 out of 3, you're up heavy. If you win 1 out of 3, you're still up, because your win is, for me example, with the 1 to 4 risk versus reward, my loss is essentially 40 pips. And the percent risk obviously stays correlated to the capital amount you have. But my loss essentially, if I took 2 losing trades, is 40 pips. If I win 1 trade as per the risk versus reward, it's 80 pips. I just recovered that loss and am up another 40 pips. And that's winning 1 out of 3 trades as per intraday trades, compound trades. Okay? See how effective it is when you just focus on the numbers that way, when you understand that losses are normal. So that is the whole purpose of this webinar, alongside with the CH Traders Brain Psychology webinar, alongside with the Psychology Refresher webinar, and alongside the Human Errors webinar. Okay? This is another great psychology topic to add on top of that, that if we can day to day shift to normalizing losses in trading and focus more and more on the risk management, focus more and more on the mental discipline, the psychology side of it, because we already have all the fundamental. I know the news bot is down for a couple of days. Again, I apologize. It will be back up. Worst case, I have another feed back up, which I can bring up in a week, but it will be back up. We just had errors as we were trying to fix it. But again, fundamentally and technically, you have all the tools in Capital Hungry. You have all the webinars you can always go review. You have the analysis that is fairly accurate week after week, month after month. You have the key levels, which you understand how they are mapped and why they are effective. You have understanding the lower time frame, key level alerts, the newsroom, analysis updates, et cetera, et cetera. You have these tools. But besides me sending the mental reminders, which a lot of people naturally ignore, we don't have that constant repetition of discipline or risk management besides the reminders I send, okay? We have to normalize losses in trading and learn to accept them. So that was a Capital Hungry educational webinar on normalizing losses in trading, plus a other few topics, plus the other few quick points. Please watch this after watching the other psychology webinars as well. Please take the time to go watch the other psychology webinars again. It doesn't hurt you. It's better than watching TV. It's better than watching a random movie or going on YouTube or playing video games. You know what I mean? It's more effective. especially when you're in the markets and you want longevity in trading. Why does it hurt to go watch that again? People can watch movies over and over again and be numbed out staring at it, but something that stimulates their brain or provides them challenges or causes them to think more, they stray away from it. It doesn't make sense. We are not going to fall into the system. We do not want to be like even though we are the 99% right now, we do not want to be there. We do not want to stay there. We want to have financial wealth. We want to be more stress-free financially and focus on other aspects of life that can bring us true happiness, like growing ourselves, helping our families, like whatever it may be for you, right? All right, so thank you. I'm going to save this and send it over, and I hope you guys enjoyed.